Check one, check moo. That's right, it's your boy back again. Okay, got a little sidebar for you today. This is not what the channel is usually about. I was chatting to my buddy about this, and when we chat in WhatsApp, it's hard to lay out all my points and explain it clearly. So if this video is not for you, that's cool. Watch it if you're interested. Don't watch it if you're not. Just trying to explain something behind the quote-unquote science of Bitcoin, or rather, I should say, what the historical data on the price of Bitcoin can maybe theoretically tell us about the future. Okay, so quick recap, no cap. So back in the day, some dude, a Reddit user called AZOP, made this chart here. He was writing in, 2014, I think. You can see the year down here and the data he had up to here. He was trying to plot the price of Bitcoin in green, and then he was drawing a line for logarithmic regression as opposed to a linear map of the price. So that's right, the price over here goes from $1 to $10 to $100 to $1,000 to $10,000. And he made a bet here that says he expects Bitcoin to hit 10,000 on November 22, 2017. Let's see how close he got. 2017. There's 2018, so November would have been around, what was it? Okay, so he said 10 grand on 11/22. The actual price was 8 grand 1 day later. So was he close? Yes. Was he exactly right? No, he wasn't. That's okay. Pretty damn close. So, sorry, I got misappropriated there. It's not Aesop who made that chart. It's Trololo from Bitcoin Talk. So, sorry about that. So, anyway, that was his prediction. His prediction was, if you want to look at the price of Bitcoin over time, you shouldn't draw a linear map, you should draw a logarithmic map. Why do we follow that? We'll talk about that in 1 second. So that was the original chart. Some guy decided to plot it as a rainbow, i.e., if the price is somewhere in the blue zone, you should buy it. If the price is somewhere in the red zone or above it, like this little freak area here, you should sell it. And he tries to chart how it goes up and down and up again to these peak points where, again, he would suggest you to sell with the hopes that you'd get a cheaper price. If you bought down here at whatever price and sold here, if you know the price is going back to there, you would use your profits from the red zone to buy in the green or blue zone, or as close to it as you can get. And again, this is the have I got it right here? Yeah. This is the logarithmic one, and this is what it looks like without the logarithmic. It's harder to wrap your brain around with the rainbow in this version. Anyway, move past those. This is the one that most people in the modern world would have seen. And instead of being up to 2014, this one is updating in real time. So you can see even today, or close to today, the 11th of May, that's 3 days ago, the price is around 56,000. Today, as you may know already, it dropped, so now it's probably 50 or 51 or in that ballpark range. But, yeah, I mean, if this is to be trusted, we would be looking at a key peak in between these two gray lines. The gray lines represent the halving. And again, there's another gray line coming up here in, 2024 sometime. Yep, around this halving line looks like a little bit after the beginning of 2024. So this would suggest that we are right now in a bull market going up, even if we've had a dip this week because Elon said something, whatever. Putting that all aside, we should be looking at, a peak when it hits the red zone somewhere like this. If it hit 200,000 in the last day of March of next year, then theoretically you would sell off then And then when it regressed down to a point somewhere around here, maybe a little under 40 at the 16th of January 2024, you would use your profits to buy in again. And then the process would repeat. Okay, so you're saying, well, that's great, Frank. Those numbers do seem to form a repeatable or a somewhat repeatable pattern. You got your peak here, you got a peak here that goes a bit too far out, and then a sort of earlier peak here. But why does this happen? What's the why behind this? Well, the answer is, it's hard to read on this screen, but this word is supposed to say halving. That means, i.e., to cut in half. The Bitcoin algorithm is set up so that if you're a miner, every time one of these gray lines comes around, the amount of the reward you get for mining a block is suddenly cut in half. What's the effect of that on the overall market? Well, it tends to drive the price up because the people who are doing the same amount of mining work and the same amount of investment of time, electricity, and hardware purchases, they're suddenly getting half as much return on their investment. So we would think of it like this. The average miner has bought a bunch of equipment and he's paying for his electrical bills and he's selling coins, but as soon as he hits the halving, no matter how good his equipment is, even if he's got the top of the line machine and cheap power, suddenly he has half as many coins to sell. So people start driving the price up. The scarcity becomes felt more painfully. Then finally, at a point somewhere like this, the price is so far up that even though the miner is now mining half as many coins, he's suddenly getting paid way better. He's selling one coin at this point for 16 grand. But when the halving kicked in, he was selling points for around $700. So he's like, right here, he's feeling the pinch, so the price starts going up. But here, the miner suddenly realizes, man, I'm getting paid so much. So what does he do? The miner sells whatever coins he was sitting on. A smart miner would have said, no, I'm not going to sell down here right when we're cut in half. I'm going to wait for the price to get driven up. And if he was following a chart like this one, and many people other than me know about this chart and are following it, if he sold at this point, he would say, okay, this is as high as it's going to get. Now I'm going to take this extra money, instead of selling at 700 and selling at 18,000 instead, I'm going to take that money and I'm going to go buy the best new mining gear I can. He runs out or he goes online, he buys new mining hardware, and so do all the other miners, or the large majority of them who are smart enough to follow this chart. And then they all start mining because the price is so high, and they got a whole bunch of coins, and the price starts to drop. So that's what happens here. There's a little recovery here, but the point is, overall, the price is dropping, relatively speaking, and the miner's equipment that he bought is getting, he bought top of the line gear for what he could get with his profits. But the gear runs down, or maybe the price of electricity goes up, and he's still selling coins, and then suddenly, boom, another halving occurs. So then, yes, suddenly the price of coins starts going up again. And if this chart is to be believed, this is where we currently are now. They've rated it by colors here. Instead of just 3 colors, they've used, the standard sort of online slang meme terms to characterize where the price would be. So again, the smart time to buy would be any time when it's in the blue. This time, when the price is around 5 grand, this is the coronavirus stock market crash thing. But you could have also bought here for about a similar price, in fact, a bit lower, when all the hype that had gone into the coin here suddenly, lost its value. Obviously, the miners, farming the coins with their hardware and then selling it off isn't the only factor in the market. You also got your Elons dropping truth bombs on Twitter and all this BS, and people writing scary articles, and big bankers saying it's all a scam, we'll never use it. That's great. You can price all that in, and you can use that to account for the ups and downs. Or coronavirus had nothing to do with Bitcoin. But when everybody sold everything off on the stock market, people who had any investment in Bitcoin probably needed to sell that too to cover their losses or whatever they had to do. So it may not have affected Bitcoin directly, but, external factors. But the overall guiding principle here is supposed to be this stock-to-flow model that they call it. The stock of Bitcoin suddenly becomes reduced when the halving comes along, and that causes the price to go up. And then suddenly, when the price is at its highest point, and the miners all upgrade and sell their coins off and upgrade their equipment, maybe they themselves, with better equipment, are producing a few more coins or whatever, and the flow therefore becomes greater. The demand is outpaced by the supply, and the price starts to drop. So yeah, again, if you were betting today, this is how a lot of people would bet. Not everybody. Some people are talking about how institutional adoption is going to make this chart, useless or obsolete, because they're saying, oh yeah, the institutional adoption is going to drive us up into crazy value. It's going to be worth $1 million, $500,000. Well, it could. That's great, but if you ask me, look at what the numbers were here. Let's say you did buy close to the end of this year, around 17,000 or so in November. Okay, so if the chart was right, you wouldn't want to sell now. You're way up now, but 50 or 60 on the logarithmic scale isn't that big of a difference. What you'd be looking at is something in the red zone. If we're hitting 160,000 per coin, or we're hitting it, I'm looking at this as like a little bit before the halfway point of this halving. So let's try to guess it around here. Let's try to be conservative here and not go for the crazy mad numbers. Even $150,000 or $160,000 per coin would be a reasonable place to sell if you believe we're going to repeat this year. This time seems more unstable to me. There's more random factors like these crazy highs and lows. But assuming we do a repeat of the last halving, we look at something like this. We sell somewhere in the $150,000 to $160,000 range. Again, having bought in at 17 grand, you're almost 10 times your investment. And then you got to play a nice long waiting game. The price is, again, if you believe the chart, the price would be dropping down. And it doesn't really matter whether it hits any of these numbers earlier. You'd be waiting for somewhere right in this range at the end of the halving, before the halving kicks in, when you get a nice, tasty price. So again, you sold at 150,000, 160,000. Now it's what is this? The 18th of January, 2024. Sometime in early 2024 or late 2023, if the price gets down to the $38,000 to $40,000 range, that's when you take the profits from the 150 and 60 that you sold at, and you suddenly buy in. You'd be buying in for ballparking at a quarter of the price. So if you sold one Bitcoin at 150,000, you could buy 4 or so at this price, and then those 4 would go up in the next halving, wherever, some future number. This is the Bitcoin Rainbow price chart. You can find it blockchaincenter.net. Bitcoin Rainbow chart. Poke around for yourself. And do not take this as any kind of real world advice. This is just magical internet money, crazy numbers on a cool little chart, with funny meme words. That's all it is. It doesn't mean nothing. So I hope this has been helpful for my explanation. Thank you for tuning in to the Moo Show. Moo out.